Are you wondering what locking in your interest rate actually means and when the best time to do it is? Well, stick around and I'll answer both of those questions for you. Hi, I'm Eddie O'Neill, president of Coastland Mortgage and your mortgage expert, providing loans in South Carolina, Florida, Georgia, and California. So your lender just called you or your loan officer called you and said, hey, it's time to lock in your interest rate. What does that actually mean and why is it important? So locking in your rate simply means that you are fixing that rate so that it doesn't change, and you actually can do it for different periods of time. And that's why it's so important, because when you write a contract on a house and you've agreed to pay a certain amount for it, you're also taking into account what your payment's going to be on that house, and you don't want that to change from when you sign that contract and start the loan process to when you actually move in. I mean, that would be a terrible situation if you bought a house, and your payment at the beginning of the process, or the beginning of the loan process was, say, $1,500, and then interest rates climbed higher and you didn't lock in your rate, and then all of a sudden that same house is going to cost you $2,000 by the time you close in 30 days. That would be a pretty unfortunate situation, and may have changed your mind about actually purchasing it if you knew the payment was going to be that much higher. So locking in your interest rate can prevent that. And most lenders are allowing you to lock in your rate for 15 days or 30 days in these increments, so 15, 30, 45, 60, or 90 days. So a lot of them don't have anything in between. You want to make sure you're working with a lender that can do a custom lock. So oftentimes the contract date, the close date, is going to dictate when, or how long you actually have to lock in your interest rate. Let's say you're closing in 30 days, you can do a 30-day lock. It's important because the longer you extend out that interest rate lock, the higher the interest rate is actually going to be. So if you locked it in for 15 days, it's going to be a little bit lower than if you did it for 30 or 45 or 60. So it's important that you don't really do it for much longer than what you need, because it's going to result in a higher interest rate. So it's important that you work with a lender that can do a custom lock. So a lot of times, you may only need 24 days before the close date. Well, you should be working with a lender that can do a 24-day lock, because that's going to be a little bit cheaper, a little bit less on the interest rate than if you had to do it for 30 days, if that's the only thing they offer. So keep that in mind when you're thinking about how long you should actually lock in your rate. Make sure, or ask your lender, hey, do you do a custom rate lock where I can lock it in for exactly how many days I need? Because that's going to save you even more money. And just a little bit more about the time periods on the interest rate lock. Like I said, you want to make sure that it's you're locking it in long enough to get to your close date, but also we can lock interest rates for one day, like I said, on that custom lock, all the way up to 180 days. And that 180 days, I think I mentioned earlier, is used for new construction. So you make sure that your interest rate and your payment doesn't go up during that construction phase of buying your home. Then there's the lock and shop policy. So we have a 180-day lock for new construction, but we also have a lock and shop policy for people that are just looking for a house. So let's say you decide, hey, we're going to go out and purchase a new house, and we got approved for a loan, and interest rates are awesome, but we're afraid that they're going to go up while we're looking for a house. Well, we'll let you lock in your rate, and other lenders I'm sure will too. So make sure when you're speaking with your lender, see if they have a lock and shop policy where you can lock in your rate while you're searching for a house. So we'll let you lock in the rate for 60 days or up to 60 days while you search for that new home. And that way, after you get pre-approved, if you're happy with the payment, you can lock it in and not worry about interest rates moving higher. Another thing that you want to definitely make sure that your lender has is a free float down. So we insure you on both, rates going up. When you lock in your rate, you're insured against rates going up with us, but also against rates going down. So if your rate went down 0.25% or more during the loan process, we'll actually lower your rate to reflect that for free. So it just, locking in your rate covers you both when rates go up and when rates go down with us. So it's such a great tool to use when purchasing a new house. And then the all-important question is, when do you actually lock? When is the right time to do it? You know, in my opinion, in most cases, it's when you get a contract on a house. I mean, that's the most common one. You know, if you're comfortable with the rate and the payment, you know, at the time you sign your contract, you know, go ahead, lock it in, and then you don't have to worry about the payment going up. And also, because of our free float down, you know, you're protected against rates going down. So if they did go down 0.25%, you can take advantage of it, but you're protected that your payment isn't going to go any higher. And that's a big deal, because I've seen it 1,000 times. It's a lot harder for someone to stomach, you know, their payment going up, even $20 or $30 a month, than if they missed out on it going down $20 or $30. So it's important to get that interest rate locked in. Talk to your lender. Make sure they have, you know, these few things in place, like the free float down, so that if rates do drop, you can take advantage of it. Make sure they have a free 180-day lock if you're building new construction. You know, a lot of lenders have a construction lock period for 180 days, except they charge you upfront fees and make you make deposits. If you didn't end up buying the house, you would lose those. You don't want any of that stuff. You should be able to get a free 180-day lock if you're building a new house. So if you have any other questions, feel free to give me a call. I'm Eddie O'Neill, president of Coastland Mortgage, and your mortgage expert. And I'm here to help, and we're just a resource for you going forward. So thanks again, and I look forward to hearing from you.